Today, rubber clogs post super quarterly results. We ask Americans why they're buying Crocs. And Tesla shares falling today. Did post record results last quarter, but it's not just from selling cars. And the latest census data is out and it's not looking good for one political party. We have details and analysis on that and much more coming up at NTD Business. Good evening and great to have you with us. As more companies report earnings today, UPS easily exceeding quarterly sales and profit targets as the health crisis once again delivered a big payday for the company. The world's biggest package delivery company smashing through sales and profit forecasts today. Total revenues rising 27% in the first quarter. It's benefiting from a boom in e-commerce deliveries as consumers continue to spend online for just about everything. Shipments rising across all geographic regions, with UPS handling 23% more packages per day on average. Shares of UPS were up on the move in record territory today. Global shoppers are expected to spend 20% more online this year than they did last year. That's what Adobe says. It'll likely add pressure to supply chains as they struggle to keep up. Major retailers and vendors from Home Depot to Peloton are under pressure from high transportation and storage costs for expensive to ship items that are in high demand. Stores like Walmart, Target, Amazon have also run out of essential products that are easy to buy in bulk but hard to keep stocked. Adobe says e-commerce sales are expected to reach $4.2 trillion this year. That's compared to $3.5 trillion in 2020. And it looks like Crocs is really taking advantage of the shift online. It had a very, very strong first quarter. Phil Zoe has the details.
Crocs, Crocs, and more Crocs.
I have gotten these Crocs. It's very convenient, to be honest.
The Crocs brand says demand for the rubber clog is stronger than ever. The company earned higher than expected first quarter revenue, $460 million, netting almost $100 million in profit. That's compared to a $11 million profit just a year earlier. People get Crocs for different reasons.
Because they're comfortable and they're easy to slip on when you're on the go.
Well, I got a job recently and I just wanted to get some non-slip shoes.
What about the way they look? Love it or hate it?
I love Crocs, just very comfortable. It's just a look only. I love it. It's fashionable as well. Like, it goes with anything basically for me.
Crocs even made a cameo at the Academy Awards this year, worn by musician Questlove. The company expects second quarter sales to grow by up to 70% year over year. One furry friend gave a thumbs up to comfy shoes. Crocs or no Crocs, he has his own pair of footwear. He can dance in them too. Phil Zoe, NTD News, New York.
Crocs shares were up over 16% today at one point, closing at around $98. And Tesla's had a big first quarter too, with new record profits, but it's not all from selling cars. NTD's Jasmina Davis reports.
Tesla reporting its highest quarterly profit ever, hitting $438 million.
2021 was a record quarter on many levels. Tesla achieved record production, deliveries.
However, much of the profit came from selling regulatory credits and trading Bitcoin. Several states require automakers to make or sell electric vehicles. If they don't meet the requirement, they have to buy credits from companies that do.
When you adjust out credit sales of roughly $518 million, Bitcoin trading revenue that was roughly $101 million, both of those things are one-time in nature. You get core income of negative $181 million.
The Bitcoin trading sent over $100 million straight to the bottom line, a quarter of its profit.
This is our personal view, that Tesla intentionally brought the Bitcoin to act as a buffer on a quarterly basis to buffer any potential shortfalls or losses in net income.
Tesla CFO Zach Kirkhorn, who recently changed his title to Master of Coin, says going into the cryptocurrency has proven to be a good decision. Tesla had previously purchased $1.5 billion in Bitcoin, selling 10% of it this quarter.
They've also managed to sell just before there was quite a big sell-off. So what it tells you is that they have really excellent foresight into some of these price changes.
As more and more companies turn to electric vehicles, Tesla's credit profits may eventually fully go away. Not only that, the EV pioneer will face increasingly more competition. Jasmina Davis, NTD News.
All right.
Toyota is stepping up its automation ambitions. It's to buy Lyft's self-driving technology unit for $550 million. The acquisition will give Toyota access to Lyft's so-called Level 5 team, as well as a direct presence in Silicon Valley and London. For Lyft, the deal will allow it to become profitable sooner and takes away the risk of developing a costly technology that's yet to enter the mainstream. Toyota currently offers Level 2 automation featuring advanced driver assistance technology. It also has self-driving projects in the works, including a joint venture with SoftBank. And stocks closed mixed on Wall Street today. The Dow, S&P 500, little change, rising 3 points and lost 1 point respectively. The Nasdaq dropped 49 points, at 0.34%. So mentioned Tesla fell after those tepid results. More big tech earnings after market. Microsoft, Alphabet both beat revenue targets. We'll have more detailed analysis on that tomorrow. Other than earnings, investors will also be monitoring the Fed meeting for the central bank's thinking on inflation, though no policy change is really expected. On the data front, consumer confidence rising for a second straight month in April, hitting the highest level since the pandemic began. And China's answer to Amazon, JD.com, is reportedly paying some employees with China's new digital currency, the digital yuan. If it's true, it'd be another milestone towards a new type of money that some say will revolutionize the monetary system. There's no cash with the digital currency. All transactions are tracked on a centralized digital ledger. You keep your digital currency in a digital wallet. Daniel Akai is the author of Escape from the Central Bank Trap. He calls it surveillance masked as money. Akai is also the chief economist at the Census hedge fund with $6 billion of assets under management.
The central bank would have all of the information about where we decide to purchase, what we do with our money, what we invest, what we save. No? So it becomes a tremendous risk, at least, that the central bank uses all of that information to know exactly what people are doing. More importantly, it can also direct newly created money to those citizens that are perceived as being socially or politically acceptable. So it can in some form support or provide some level of premium to newly created money to the citizens that are in some sort of way, behaving as politicians want, and penalize those that behave in a different manner. That is one of the risks of obviously having a digital currency.
It's a pretty scary thought, and I believe that China, the central bank in China, have even said that their currency could have like a use by date, a sell by date, and if the person hasn't spent the money by then, basically the central bank can just turn off their money, take it away again, right?
Yeah, which generates another enormous risk for many citizens. You don't know if you're going to be able to save your money because it can disappear from the account. Furthermore, it might make people spend on things that they don't require, and then create a perverse incentive to demand more money even if the inflationary pressures are rising. So in reality, having a sell by date makes it even more risky, not less risky.
I would say, the chances of central banks actually doing what you've been advising them to do and doing it with the digital currency is pretty slim, right? To restrain themselves and adopt sound money policies. If they don't do it, are we going to see something like Bitcoin or another, a privately held cryptocurrency or something actually competing with these sovereign currencies?
Absolutely. If central banks don't understand that destroying the currency's purchasing power and destroying the confidence in the currency, be it digital or be it the what we know today as the fiat currency, is going to be extremely damaging and create a much more robust alternative, be it Bitcoin or anything else. If they don't understand that, they should really start to do it. They should really start to do it, because the idea that you can constantly push the limits of monetary policy to the extreme. Wait for something to happen, and if it doesn't happen, push the limits again. Ends up generating a tremendous problem. So the point that I'm trying to make is that central banks should avoid trying to play the lesser evil and should start showing citizens that the reason why there is confidence in the currency is because it maintains its value as a reserve of value, and that it will continue to be widely accepted as a currency and means of payment and as a unit of measure, because any type of threat or legal action or trying to ban cryptocurrencies, etc., will not work. If it's not cryptocurrencies, it'll be gold. If it's not gold, it'll be silver. If it's not something else, citizens will run away from the currency if they perceive that the objective of the central bank is to destroy the purchasing power and the savings of citizens.
Wow, it's a really, really interesting space, really heating up. Daniel Akaya-Tresses, thank you.
Thank you very much. Have a good day.
In a major shakeup of the mobile advertising industry, Apple is updating its iOS operating system with new privacy controls. It's designed to limit digital advertisers from tracking iPhone users, but experts say it'll hit the mobile advertising market hard. Libby Hogan reports.
Apple will begin rolling out an update of its iOS operating system with new privacy controls. The company said Monday the new controls are designed to limit digital advertisers from tracking iPhone users. That move comes off the back of a clash with Facebook over user data collection. Facebook says the change will hurt small businesses and their access to target customers with advertising. Apple has stood firm on its decision, prioritizing its customers' control over whether data collected by them is shared with third parties. Software marketing expert Alan Adamson said the change is a major shakeup in the industry.
Apple is responding to a real consumer desire for privacy, and that desire exists among Apple users, but exists among all people who are using mobile software and mobile apps and mobile phones. So they're the first of many that are going to make this transition to better protecting privacy.
So what will it look like for Apple's pool of more than 1 billion iPhone customers? A new pop-up notification will ask permission for apps to track you across apps and websites. iPhone owners will also have a tracking menu in their iPhone's privacy settings where they can opt out of tracking. Industry experts say the change will hit the $100 billion mobile advertising market hard, with some mobile analysts believing fewer than 1 in 3 are likely to grant permission.
The chief executive of pharmaceutical giant Emergent Biosolutions reportedly sold $11 million in stock right before shares in the company dropped. According to filings with the Securities and Exchange Commission, its CEO Robert Kramer sold more than 97,000 shares of the company's stock. That was in the weeks before it came out that Emergent Biosolutions had ruined as many as 15 million doses of Johnson & Johnson's COVID-19 vaccines it was manufacturing. Stock prices then took a nosedive, losing half their value. The Washington Post first reported the stock sale, but Emergent Biosolutions issuing a statement saying, quote, Mr. Kramer, our executive team, and our board of directors are held to the highest ethical standards and follow strict compliance with all laws and regulations governing financial transactions. Any insinuation of wrongdoing is without evidence or merit. And the latest census data is out, and Republicans are probably happier with the results than Democrats. 7 states will lose an electoral college vote and a seat in the House of Representatives. The greater your state's population, the more seats you get. Texas will get 2 more congressional seats. Florida, North Carolina, Colorado, Montana, and Oregon will all get 1 each. The states that will lose a congressional seat are New York, California, Illinois, Michigan, Ohio, Pennsylvania, and West Virginia. The seat changes set the stage for a battle that could reshape political power in Washington over the next decade. The shift to states like Texas and Florida, where Republicans control the state houses, could be enough to erase Democrats' razor-thin majority in the House. Jonathan Williams at the American Legislative Exchange Council has been comparing states on their economic competitiveness for years. In his analysis of the latest census data, he notes that economic competitiveness is a clear driver of where people are migrating to and from within the U.S.
Well, yes, Paul, it sure is. And this is not a new trend. This is something that's gone on now for a number of years. In fact, for more than a decade in our Rich States, Poor States report, we've shown how Americans really continue to vote with their feet away from states that have high tax burdens and especially high income taxes like New York and California, and going to places like Texas and Florida, two of the big winners from this new report, as Americans look for that economic competitiveness and a better cost of living and a better quality of life in many cases by going to states that have lower taxes.
Is it only lower taxes? Are there other economic policies that these states are implementing that are helping?
Well, absolutely. You look at America's most competitive states. The fastest growing state in America this last 10 years is Utah, ranked #1 in economic outlook in our report. So it's taxes, it's lower regulations, it's better business environments, and it's overall better quality of life at a lower cost of living. And I think that's really the key to the success of the states that are growing out there, whether it's Utah, Arizona, you look at Idaho, Nevada out west, some very fast growing states that value taxpayers and value good business environments.
I believe it's the first time ever that California lost a seat. Is that correct?
In fact, that is one of the big takeaways, perhaps ignored by many in the mainstream media so far. But liberal California, after decades of gaining congressional seats because of the huge in-migration, California, of course, being the Golden State, being the largest state in America, has now lost its first congressional seat ever since 1850, since statehood, because of the migration effect of Americans going to one of the other 49 states in order to find better economic opportunity, whether they're being taxed out of their homes because of values going up and taxes, or whether it's businesses leaving and going to places. We saw Elon Musk just recently. We saw HP Enterprises. We've seen this huge exodus of the tech sector, even going out of Silicon Valley and going to states that are more competitive.
There is some debate at the moment over taxing places and taxing areas. Some people say, well, it's a myth that people actually leave if the taxes are raised, et cetera, but you believe that this is tangible evidence that this really is the case. You tax people and they're going to leave.
Well, we know it to be a fact when it comes to the anecdotal evidence from some of these individuals that tell us that they leave because taxes are too high in California and New York and other high tax states like Illinois and others. But then beyond that, the other piece of this that a lot of people forget is people actually go, we know they go for economic opportunity. Now, taxes are a piece of that puzzle. They're enhancing economic opportunity when you have lower taxes like Texas and Florida and the states that are growing. But they are an important piece of the puzzle. But overall, I mean, this idea that tax flight is a myth is actually just really unfounded based on what we know, what people actually tell us, and then where people are actually going as they vote with their feet from this new census data.
What's going to happen if we see the federal taxes keep rising? People are just going to leave the country?
Well, that is a real threat, and that's a piece of it. The other threat is that the federal government comes in and tries to dictate to states what they can do and what they can't do with their own tax policies. That's something we followed very closely recently because of the new stimulus package, so-called stimulus package that just passed out of Washington, says that states, if you take money, you can't use it to cut taxes. And so federal intervention, getting away from this tax competition that is really, benefiting the states that keep things competitive, and it's harming states like New York and California that keep raising taxes, that is a huge threat, I think, to taxpayers across the country. Because, Paul, at the end of the day, when states compete with each other, people win and taxpayers win.
It's a big topic. We'll leave it for another day. Jonathan Williams, American Legislative Exchange Council, thank you so much.
Thanks for having me.
And President Biden is ordering all federal contractors to raise their minimum wage to $15 an hour. The current minimum is $10.95 an hour. That's nearly a 40% hike. The executive order will take effect next year. It'll impact hundreds of thousands of federal contract workers, from cleaning professionals to nursing assistants, food service workers, and construction workers. The new minimum wage will also go up every year based on inflation. The White House says raising wages for workers will improve productivity and reduce turnover. Raising the federal minimum wage, though, is a hotly debated topic. Democrats have been pushing for a $15 nationwide minimum wage, but several Republican senators recently proposed a $10 minimum. A study by the nonpartisan Congressional Budget Office found that raising the overall federal minimum wage to $15 an hour by 2025 would cost 1.4 million jobs over 4 years. At the same time, it would raise wages for around 27 million people. And fundraising by Chinese companies on Wall Street is at record highs this year. That's despite the risk that they could be delisted if they don't comply with US audits. NTD's Patrick Hayden took a look.
The Financial Times reports that Chinese fundraising on Wall Street is up 440%, despite the threat of delistings. The hope of generating huge valuations apparently outweighs the risk of forced delistings. That's even as the US has already kicked off 3 Chinese state-run telecom companies over their ties to China's military. And last year, Congress passed a law to delist companies if they don't allow US audits for 3 years running, something Beijing prohibits. Data from Deal Logic says Chinese companies raised a record $11 billion on the New York Stock Exchange and the Nasdaq. It's via initial public offerings, follow-on share sales and issuance of convertible bonds. Some of the biggest listings are ALEC Technology, an e-cigarette maker with an IPO of $1.4 billion. Tuya, a software company with an IPO of $947 million. The listings reflect China's strong economic recovery from the pandemic. Patrick Hayden, NTD News.
Still to come this evening. Have you received your tax refund? If not, you're not the only one. The IRS says it could take weeks for you to get your refund this year. And restaurants around the world are still hurting as more and more work to reopen. Some are adapting their menus for takeout in the meantime, and in Amsterdam, one luxury cheeseburger makes the cut. Find out more after this short break.
Put the keys down, Kevin.
But I'm gonna drive home.
There are several warning signs present that you shouldn't be driving.
My text to emoji ratio has gotten a little out of hand.
A little?
Yep, I'm definitely gonna call a ride home.
I felt accomplished after I got my diploma. Made me feel that I could take on whatever challenges life throws at you.
Find free adult education classes near you at finishyourdiploma.org.
The glory of piano masterpieces from the Baroque, Classical, and Romantic periods. New Tang Dynasty Television invites you to join the 2021 NTD International Piano Competition. Together, we preserve and revitalize the art of authentic classical piano music. October 2021 in New York City. Register now at piano.ntdtv.com.
If you've already filed your tax return and you're wondering where your refund is, you're not alone. The IRS usually distributes most refunds within about 3 weeks or less after you file your return, but this year the wait's been 6-8 weeks for some early filers. Manual processing is the reason behind the delay. According to the National Taxpayer Advocate, the IRS is holding nearly 30 million returns for manual processing. It's happening because of last year's $900 billion stimulus package. Called the Consolidated Appropriations Act of 2021, the measure implemented tax code changes, but the IRS hasn't fully adjusted to them. And a luxury restaurant in Amsterdam has turned to takeout service during the pandemic to stay afloat. Now it's serving an upgraded take on a humble classic. NTD's Andrew Thomas has the story.
The Waldorf Astoria Hotel in Amsterdam initially balked at the idea of offering burgers for delivery. Then the pandemic hit. Without guests or open dining rooms, hotels and restaurants in the Netherlands have had to turn to other services, like offering takeout. For the canal-side Astoria, that meant a $20 burger to go.
Well, in this period of time, in the middle of the pandemic, you get more and more creative and flexible, and it doesn't matter what you serve, but it needs to be good, need to be the best of what you can do, and need to be the best of town, at least of the competitors. That's the most important.
For $23 plus an Uber Eats delivery fee, the Waldorf Signature Burger comes with an 8-ounce Holstein Friesian meat patty, topped with English Duke of Berkshire bacon, aged Dutch cheese, and homemade relish on a French brioche bun. Uber Eats reviewers have given it 4.8 out of 5 stars. Hundreds of weekly orders have made the burger a success, but they won't compensate for a prolonged ban on inside dining that could extend for months. Crafting the perfect burger took serious research, and Shoot was apprehensive at first.
I was a little bit against it because I'm not a big fan of sending food out what is warm, what is hot. And so I was a little bit nervous, like, is it going to be good? Is it going to be okay? So we did a lot of trial cookings.
Dutch plans to ease some lockdown measures have been pushed back until April 28th at the earliest. In the meantime, the burger is here to stay, and it may even become a permanent fixture on the Waldorf menu when normalcy returns. Andrew Thomas, NTD News.
As the latest business updates for today, you can still catch NTD Evening News with Stephanie at Cox. That's at 6:30 p.m. Eastern. For NTD Business, that's all for today. Thank you for watching. We'll see you tomorrow.
We have a new channel. Subscribe to us on YouTube at NTD News. Get the highlights of our news broadcast and the most important headlines that we curate especially for you.
Don't miss out on important news. Our videos are being deleted. So if you don't want to be cut off from honest news, take a moment to sign up for our newsletter at newsletter.ntd.com so you don't lose access to NTD. Go to newsletter.ntd.com to sign up for our evening newsletter.